Well, local investors are going into real estate because the stock market has been such a poor choice for them. You know, when you have BHP, which was the largest stock, going from $45 to $15, a lot of people stand back and say, I want to put and reallocate my money into somewhere where I have certainty. So our stock market has been a big factor in the rise in real estate. We haven't had, you know, you have a look at Snapchat, for example, came on at $17, opened up at $24. That's one example. We haven't had a tech IPO of that size in this country, of that success, for a very long period of time. So a lot of local investors have limited choices as to where they go and invest.
And
real
you can't
estate's
beat
high on
a
that list.
15% rise in property in the past year or so, can you?
Exactly. The rise has been there. The income certainty has been there. The banks are willing to lend to the right people. And there's a poor choice of alternatives, particularly when interest rates have been so low. I mean, keeping your money in the bank at 1 or 2%, then being taxed on that isn't very attractive to somebody who's working really hard to save a bit of money to put towards their future.
So there aren't any potential structural issues in terms of the property market, particularly where we are looking at also record high levels of household debt.
There's always vulnerability. There are always going to be parts of the market that perform poorly and other parts that perform well. But I think history has shown us, particularly over the past 10 or 20 years, that overall, on aggregate, in this country, we have a rate of growth that's consistent.